Broadcasting live from the Business RadioX studios in Atlanta, Georgia, it's time for Excel Radio's Ask the Expert. Brought to you by Beckshot Photography and Video. It's your story. Make it awesome. For more information, go to beckshot.com. Now, here's your host.
Hi, everybody. As they said in Poltergeist, they're back. Stone's with me here. Co-host Robert Mason's here. Hi, guys. How you doing?
Good.
Good. It's a doubleheader today.
Doubleheader today. We're doing content. We're throwing out the episodes, bringing in all the special guests and the superstars and the rock stars. You'd think we were a power player.
I know we're going to be. It's coming.
That's right. That's right. Special guest today, Darin Hunter from MortgageRight. Hi, Darin.
Hi, sir. Thanks for having me in, guys. I appreciate it.
We're going to talk a little about your story, but Darin, for those of you who don't know yet, is a superstar, and we're going to get to that. Tell us a little bit about MortgageRight and about Darin Hunter.
Sure. So I've been in the mortgage game now for 22 years. So I'm like one of the old guys in the mortgage business. I've made it through a couple different downturns and survived and keep thriving. They can't get rid of me. I'm like the cockroach in the mortgage world. So, been having a good time doing it. Been, graduated from UGA with a finance degree and wanted to be a bond trader. That was my whole gig. But, when you graduate in 2002, things changed a little bit in Wall Street, just prior to that, right?
So, for about 15 minutes, I wanted to be a bond trader too.
So anyway, I literally took the first gig that I was offered, and that happened to be in mortgages. And I just happened to, I understood finance, understood how to restructure debt. I just kind of had a knack for restructuring and people's debt by taking equity. And at that time in the early 2000s, we were having a nice little run up in equity and appreciation. And so people were taking advantage of pulling out some money. So we're doing a lot of refinances, second mortgages, home equity lines. And I just understood that and understood how you could take money and cash flow, how you could reinvest money and create, other opportunities, whether that's investing in the stock market or investing in real estate or whatever the case may be. And so I just was able to speak to people about that pretty intelligently and, right out of the gate and just had some success. And, shortly thereafter started just like most success stories, I guess. I saw that things could be done a little bit differently. And I went out on my own and was literally had a branch of the first, net branching company that I got involved with, which was a group by the name of Flagship Financial Group. They're no longer around, but, we started out of my house. First house I ever bought. I was in one guest room. I had another guy in another guest room. And as a couple years went on, I had people in my living room, people in my family room. And then the Bell South guy told me that, hey man, there's no more phone lines. You gotta get an office. So we eventually,
this is residential service.
Yeah, turns out, yeah. So, we just started growing from there. And then of course the crash hit and, believe it or not, I found that I had another knack, and that was spotting trends. And I was able to find a couple trends. I was licensed in 27 states and noticed that on CNBC on a daily basis, you saw campers and people flocking to all the states that were doing fracking, in the oil industry. You remember, there was an asset bubble or a commodities bubble.
South Dakota, North Dakota.
That's exactly correct. Yep. And people thought I was crazy for being in South and North Dakota, but it turned out, it was kind of my saving grace. Pennsylvania, Ohio, of course, Texas. And so the oil industry, oil was blowing through the roof at that time. So that was one of the only industries that were paying. Well, they needed places to go. They couldn't be in campsites forever. So they started buying houses. So I was marketing to those campsites. And then, I started thinking about, well, who else is paying? The government. Well, started looking at, some of the different military bases that were out there in the states that I was licensed in and started marketing to them. And, next thing you know, we're doing a ton of VA loans and just kind of grew the business from there. And, it was a weird time, back in 2007, 2008, my parents, I think my dad had lost his job. My mom was on the verge of hers. My sister lost a job. My neighbors were out of job. I mean, it was just there's a lot of, high unemployment, right? All across the board. So, I was in my late 20s and I didn't really, I wasn't like a flashy guy. And I didn't want to flaunt anything. And we were having some success. And so I started just under the table, quote unquote, under the table. I say that I just wasn't like telling people about it. I was just buying up real estate as much as I possibly could. And, it turned out,
good time to be buying.
15 years later, it turned out that was a pretty good move.
Yeah.
Turned out to be.
I'll say so.
So this story is sounding kind of familiar to me. Our previous guest on last episode was Mayo, professional football player. He, and then drug dealer. Now we got Darin, basketball player, and then a mortgage agent. So basically same story.
Yeah, pretty much. It's all the same, right?
All right. So, Robert is a top market realtor over in Marietta and Roswell. He does a tremendous amount of business. I like to think that the video I do for him has something to do with that.
No doubt about it.
But mainly it's his charming personality and movie star good looks, right?
Yeah, that's all.
What does a guy like Robert need to know about MortgageRight?
So MortgageRight, we provide value, right? So, I'm not going to sit up here and I'm not going to talk to anybody and tell them how great my services are, how low my interest rate, how low my closing costs are, because they are. I'm going to talk about the value that we provide to you and your borrowers, to how do we become a partner with you. And so that way I'm not sitting there asking you for referrals. How am I providing you referral? And it may not necessarily be handing you a deal, but it may be education. It may be, the new trend right now is chat GPT or AI and how we implement AI into real estate. And we've had a lot of success teaching agents, teaching brokerages on how to use that successfully right out of the gate. So again, just spotted another trend and felt like I wanted to be on the front end of that curve. So that's how we add value. That's the biggest thing you need to know about MortgageRight for sure when it comes to referral type partner.
I think one of the hardest things for me to get around these days is how reluctant people are to pick up their phone or answer their phones. I've got a lot of people in my sphere, and these are business hours, and you call people and people don't answer the phone. People don't return phone calls. People are reluctant to talk to you or to meet with you. It's like pulling teeth to get people to do their job these days. I don't know if you're finding that at all.
So there's no doubt, there's the younger generation. I guess I'm the Xennial, right? So I'm in between. I'm not quite a millennial. But the millennials definitely have that problem. And I've spent a lot of time educating my guys on how to have uncomfortable conversations, and you can't do that by text. Okay. So we always talk about, your success will be determined by the amount of uncomfortable conversations that you have, in life and in business. And you're not having that conversation over via text or via email. You're actually picking up the phone. You're discussing that with that person. And sometimes it's about ripping off the Band-Aid. So we spend a lot of time on that because that's one of my big pet peeves too. Just pick up the phone. Now, when I started in the business, I had to make 300 outbound calls a day. Yeah. So I kind of got over that, fear of getting on the phone and talking. And certainly when we bring people in, I definitely train them to get on the phone, but I don't force them to do 300 outbound phone calls a day like I would do. I mean, that's kind of like,
only 275.
Walking. Yeah, right. That's like the old stories my dad used to tell me about walking to school, in the snow, uphill both ways kind of thing. So, we don't do that anymore, but yeah, it's you're on call in this business. You have to be. Yeah. It's you try to set expectations when you're talking with your clients, your borrowers, also your referral partners. But things happen. You know this. You've been doing it. You said 33 years. Yeah. So you got to be able to jump on things and put fires out right out of the gate and be able to act efficiently.
I mean, because my business is linked to your business.
Sure.
And there's no day that I'm off. Right. If I'm on vacation, my phone is still there. Unfortunately, I'm still answering the phone. Right. But so many of my coworkers, people that I'm around, and they take the weekends off. They'll go on vacation and they won't answer their phone. And I get it. People need to unplug. I totally get it. Yep. But for me in my business, if I need a pre-approval letter or if I need to know what the rates are to see if this guy's going to qualify when I run it on my HB12C, I need to know the answers to those questions.
Well, one of the answers to that is technology. That's where we've been able to step into is use some of the technology where we can, if we're not available for whatever reason, you have the opportunity to, up to a certain level, change your pre-approval letter, or you have the ability to check on interest rates. But not only that, but you mentioned it before, Ray, I didn't say anything about it, but I was a fairly high level basketball player for a long, long time. And I'm a big team player. That's everything around my life is team, whether it's my family, my office, the business clubs, the networking clubs. It's about team and team effort. And when I bring people on to my team, we have each other's back. So if I'm out of town, somebody's picking up the phone.
Right.
If somebody else is picking up the phone, out of town, I'm picking up the phone for them.
Right.
So that's the key is making certain that you have coverage.
Yeah.
So no, I get that. Absolutely.
Woodstock Business Club was your baby, right? You started that with some of the others?
Well, there were 6 of us that put it together for sure.
You started it as a team, and obviously you've built a really good team over there.
We've got some great leadership. We started as another networking group. It was, one of the, they shall not be named networking groups, and it just wasn't going anywhere. There wasn't, I don't want to say it wasn't leadership. It was so rigid and it was closed, and they have their places, and they do wonders. There's no doubt about it. And for a lot of people in a lot of places. But what I find is no matter how closed a networking group is, not everybody's 100% loyal to that.
Right.
So
the contributors.
Right. So we try, when we came up with the concept of the open, not that we developed the concept of networking, but we implemented the concept of open networking group for the Woodstock Business Club.
Well, you did it with a unique character too.
And just energy,
way than some of the others.
Just a lot of energy, not stuffiness. Obviously we're in there to generate income. Okay. That's the bottom line. Like, anybody telling you differently is, I don't believe you. But I mean, for friendship, of course, but we're there to generate money. But we're not going to sit there and put up numbers like you would on if you were at my office and we're running through your pipeline. We're not going to go through, we're not going to micromanage how many referrals you're giving out and then putting a value to that. Your level of contribution will rise to the top, and people will see that, is the way I believe. And then people will be loyal to you if you're doing that.
People are getting tired of hearing me say it all the time, Stone especially, but you've built such a neat community there as well. I don't know if Robert knows this about it, but when he says team, he's not kidding. It's a community effort, and the club, have reason to know that the club has helped people that have needed help when they've been in trouble, and some things have gone on, and this club has stepped in and made a real difference in some people's lives just for the asking.
Yeah.
Right. So it's not just a networking group. It's not even just a community group. It's in a very real way, it's loosely organized, but it is a team.
Yeah.
Really a bonded team.
It is.
It's a real unique environment. I like it a lot.
I love that.
Yeah. We're taking it to the next level too. Now at this point, we've had a couple years of nice run, and now we're implementing some automation, newsletters, automated text, just to remind people. We've got the websites, that we're just trying to create additional value for being a member. It's $50 a year. It's not a huge ask, but a lot of networking groups don't charge anything.
It's a cheese dip and a margarita as far as I'm concerned. Right. All day.
So
exactly.
Robert, another surprise for Robert here. Stone and I kind of know a little bit about this, but Darin's a superstar. Darin's gone national now. He tell us about your TV show. Tell us about this hosting gig.
So, I don't know about superstar. I mean, I've been a superstar in my head for 44 years for sure, but I got an opportunity to be on what's called Financing the American Dream as part of American Dream TV. And there's a couple different arms. There's Selling Atlanta, Selling Houston, Selling, whatever city they're in, whatever metropolitan area they're in, it's selling, but those shows are local. Which is, they're great because you become a local sort of celebrity in that area.
The local expert.
Exactly. So, but Financing the American Dream, which is what my arm is a national show, and it airs once a month. It's a 5-minute. My segment is a 5 minutes within a 30-minute show, and we meet with. It's about community, culture, lifestyle, real estate. Yeah. So kind of like that 80-20. Because we don't necessarily want to be HGTV, but HGTV's done pretty well too. So,
sure has.
Well, and this is a pretty special deal. That production team has got a couple Emmys under their belt. according to their website.
They do. They've just recently picked up, I think, 5 tellies too. And I'm still kind of new to it. I'm less than a year into it, so they've had some pretty nice accolades.
Those are vigorous slaps on the back from your colleagues, right? Saying,
that's cool.
well done.
That's
what
cool.
they are.
Yeah. And they give us so much freedom too. It's really up to it's real TV. It's not just reality TV.
It's not scripted.
It's not scripted at all. I mean,
it's kind of like this program,
right? Like when I go somewhere, I try to do my due diligence, and I try to come up with questions and concepts and discussion topics, so it leads somewhere. So we're not just wasting time out there, but yeah, it's totally real.
It's excellence. MortgageRight is excellence. Excellence keeps coming up all the time.
Yep.
Me and everybody else, on a show called Excel. It's almost like we planned it that way.
Almost.
Well,
I mean, when we're talking about, financing and mortgages, and there's a lot of people talking about that right now. That's the subject of today's, environment, fiscally speaking.
They just hit us with another rate increase this past week, didn't they?
No, I heard that they were not going to increase that. I could be wrong.
You are. It was a 1/4 point increase on the overnight lending rate, which is not
That's
mortgage.
The overnight rate.
That's the overnight lending rate. That's not mortgage rate.
So
right.
They're clamping on the bank a little now.
They've been clamping on the bank pretty significantly. It's unprecedented.
Does that have to do with the Silicon Valley Bank deal? Or is this something else?
No, this is the Fed's attempt at fighting inflation.
Right.
This is what their attempt is to fight inflation and
raise the cost of money to fight inflation. To me, seems the wrong way to
print more, but make it more expensive. That makes no sense. That's not going to work.
Right.
Yeah, it's the Fed is kind of our arch enemy at the moment, right? I mean, and unfortunately, what the Fed does is they look in the rearview mirror. They don't look ahead, and they depend on lagging indicators to make decisions on information that you can get real time. So they should be able to make and act on real time. I mean, for example, they kept mortgage rates artificially low for too long.
Right.
I mean, you can look at the charts
for a decade.
If you follow inflation, the chart of inflation, and you follow mortgage rates over the history of time, they follow one another.
Right.
Mortgage rates follow inflation. What happened when they were buying mortgage-backed securities and they were artificially keeping mortgage rates low, they kept mortgage rates low, but inflation was spiking. So instead of stopping the purchasing of those mortgage-backed securities and let mortgage rates do what they typically do, we would have and stopped pumping that money into the economy. We would have definitely not have seen as significant of an increase, in my opinion. I can't say without a shadow of a doubt, of course, but I mean, it should have slowed down inflation significantly. And now we're playing catch up, and you see what we're dealing with right now. And
you see the investment into bond rates too, that's taking a lot of these banks out as well.
Oh, well, interest rates go up. What happens? Interest rates and bond prices work inversely. Mm-hmm. So if interest rates go up, the price of that bond goes down. So if that asset goes up, the interest rate goes up, then the cost is going to go down. And that's exactly what happened to the community banks.
Right.
It's a real thing. It's called interest rate risk. And it's mind-boggling to me that nobody is overseeing that. Like that's something that should have been paid attention to. It should have known. It could have stopped a lot of this. And unfortunately, there's a lot more to come, in my opinion. We just saw another one this past week where there was another banking failure. So that's just kind of really the sort of the tip of the iceberg, in my opinion.
Well, nobody's talking about it. They're afraid to talk about it because we're already in a fragile economic situation.
They're being discouraged
and it's getting worse
from talking about it too, because it's going to expose some imbalance in the bank portfolios where they've got
it's outright
various
dishonesty.
Kinds of risk that they're overexposed to.
Yeah, all these banks.
This is what happened in the 80s with the fur-bearing trout farms when the interest rates started going up.
Well, look at the dot-com collapse in 2000. Yeah. It was what was the dot-com collapse based on? Nothing. Air. No brick and mortar. Yeah. Those companies were coming and going and were getting fed millions and millions and millions of dollars, and people were buying it, and people had no idea why they were even buying, me included, and I lost. So there's a lot of that going on.
And inflation's a money phenomenon. The more money you put into the system, the prices are going up.
We're just printing money, Randy. Come on. Yeah. It's the federal government. They can do whatever they want.
There is no other outcome to that than inflation. And so now the question is trying to manage that by
what do you do?
By the same people, by looking in the rearview mirror. That's not a good strategy.
Is the question they'll do what they want inflation, because then that devalues the debt that they have.
You look at these countries that are getting ready to get rid of the dollar as the standard bearer as well, and that is frightening.
And we all know, every one of our listeners knows that in an inflationary period, when you issue new money, the one that benefits the most is the first person to get the money.
That's right. That's right. And all of our listeners know where we stand too.
Who is that?
Yeah, before we get ourselves in trouble.
So what's coming up on your TV show now? What I saw you did a couple of episodes. One was with that Keller Williams agent.
Yeah, that was one of the first ones we did, actually. Okay. So we just recently did Terminus Wake Park, which is up right outside of Cartersville, or Emerson, really, right there at Lake Point. And Chase Andrews is the owner of that. And he's just an unbelievable guy. His energy is phenomenal. He's so positive, and he does so much for all the youth that he touches. Yeah. I mean, he really is like this father figure that's out there showing. He's a ex-pro. Used to live here in downtown Woodstock, actually. That's actually how I met him initially. And then, watched his
ex-pro what?
I'm sorry, ex-pro wakeboarder.
Okay.
Yes. So Terminus Wake Park is a cable system on these two lakes, and they have all these different, jumps and rails and all the stuff. I have no idea what I'm talking about and how to do, but it's really awesome to watch. And, the film's really, really well. And they just have this awesome community, tons of positive energy. And he just does so much, and he's got a great thing going. And there was a lot of action going on, a lot of suits coming in, talking to him while we were there. And so, listen, I'm just speculating, but it seems like he's got a couple big things in the works. But he's got nothing but positive.
There's a wake park, a wave park they're going to build over like Beaufort area, somewhere over that way in the flat. Big deal wave park coming up. I talked to the developer on that a few weeks ago.
These are activities that we probably don't want to go do, right, Randall?
I'm thinking we want to try, don't you?
So let me tell you this.
Screw up your other knee.
While I was there, there was a gentleman. His name is Leo. He made the cut of the show that I got to see the first cut on. He's in his mid-70s. He was there for exercise and work, and it was just like it wasn't scripted at all. I just saw him. I was like, I got to interview you. You got to be on this show because we got all these young kids coming up. I'm talking 10-year-olds up to mid-20s doing all these flips back, and he's out there. He grabs his board and gets on there, and just an awesome guy, super positive. Again, I mean, it's just a really cool community. And he just goes out there 4 or 5 times a week to exercise during the summer.
That's awesome.
It's cool. Very
Love
cool.
That. Love that.
It was a lot of fun. It was one of the most fun I've had on the show. So. That was the most recent one. That's getting ready to air. I don't know the date yet. I should know literally any day now, but it'll be in the next week or two. Mm-hmm. And then tomorrow we're actually filming at this gentleman is from South Africa. He built this super successful business where they do the powder coating for all these high-end, high-dollar cars. He's got a place in Alpharetta. He's got a place in Marietta. And he's also hooked in with Tesla. And so we're looking forward to checking that out and seeing some pretty fancy cars. And, cool. I'm not a big car guy. I mean, I'm still driving the same first new car I bought in 2008. So I'm 15 years in on my car.
Well, I'm afraid to spend money. So I'm a realtor. I never know when I'm going to get paid.
Exactly. We've been down that road before.
Yeah,
so yeah. So anyway, and then we're doing Atlanta Motorsports, Park, Speedway. It's the one in Dahlonega. I'm drawing a blank on the name, but that's at the end of.
We have people stay at we've got an investment property cottage on a lake, Lake Sconti in Big Canoe, and so we have people that come in and they rent our place and they're like racing at that track.
Watch for in the fall, by the way, for the motorcycle racing documentary from us.
Awesome,
John. Is that where you did your that shooting last year?
Some of it over there, some of it at Talladega, and some of it down in Florida.
Yeah. That was pretty cool.
Yeah. So they've got these new condos that they built at the park, and where you can buy the condo at the garage below, and then you can sort of customize the top level. It's like literally like a condo. I mean, there's people make them into bars and like man caves on steroids, if you will. And then down below are like where they keep their cars, and then they have little balconies and they overlook the track. I mean, it's just so cool. And we're getting ready to go out there and film that. And there's a drag race that night or that Saturday that we're going out there, the 26th, I think.
That would be so cool.
Yeah, we're looking forward to that one too. That's gonna be fun.
We should go check that out.
That's a lifestyle deal right there.
Yeah, we should go look at that. That'd be good. So tell me what are your prognostications for mortgages moving forward in the next, say, 6 months?
So, I'll be the first one to tell you that I did multiple classes, multiple presentations back in November, December of last year on inflation and where my expectations were. And I should have been right.
But were you?
I should have been right, but I did not foresee the banking crisis that took place. And that's where, when that took place, the amount of money that the Fed started to reprint again and pump back into the system, you saw M2, which is money supply, right, of the Fed. So you saw it actually starting to make a nice trend, one of the biggest dips we've had in decades. It was dipping very, very nicely. As soon as those banks went under in March, that spiked back up, and then boom, interest rates flipped back around. So I was expecting interest rates to be.
Is it really a crisis? We've had a few banks close. Big ones, yes. A lot of money, yeah, no doubt. It's a crisis for the people at the bank and their depositors. Is that really a banking crisis? I mean,
it is.
Are we talking about a monetary phenomenon because a handful of banks went under?
There's going to be many more, in my opinion. I know time will tell, as always, right? But it's not. But it's not that. Think about the payroll that's not getting paid. The people that have nothing to do with these banks that are no longer going to be receiving their paychecks because a banker wasn't paying attention to the risk that they were taking on with the amount of bonds that they were holding, which got devalued, and then they got triggered. So it's not just it's affecting so many people, and there's so many layers of people that are going to be hurt by this if they don't do anything about it. And so, I think it is a crisis. I think it's right now been staved off. I think there's the potential for some significant hits. We'll see.
A couple of months ago, Janet Yellen was asked about inflation, and she admitted, I don't really understand inflation.
Oh, yeah.
Oh, no kidding.
Yeah.
No kidding.
It's kind of sad, honestly. And they have, I think, 200 of the top economists in the country, supposedly, evaluating all this stuff. And yet they continue to make,
Do you think their hand is being forced, or do you think they're just, I hate to use the word ignorant, but come on.
I think it's above my pay grade, first of all, but I think, again, I mentioned it earlier, they're looking at lagging indicators. They're not looking at, they're looking in the rearview mirror. They're looking at data that's already been digested by the system. And if they were to make decisions real time, they would have a better handle on what's happening. And so I think they're using data that's just late to the game. Honestly, that's really where I believe they're making their biggest mistake.
So what do the leading indicators say? What are you looking at?
So, when you're calculating consumer price index, housing is one of the the cost of shelter is one of the largest factors that's in that calculation, right? It's about 30. I'm going to not have this on dead on, but it's around 32% of what the total calculation is. So shelter costs have been coming down tremendously, but how they're calculating the shelter cost is a 12-month average as opposed to a month-to-month average. So a month-over-month average, in other words. So they're looking at the last 12 months so if you're looking at a bell curve, you're seeing it's still going up and just barely peaking at the top of the bell.
We're talking housing prices.
Shelter costs.
Monthly costs.
So rental rates, essentially.
Okay, rental rates.
So, the cost and rental rates have been coming down, across the board. And so in real time, they've dropped tremendously. But the factor that they're using is it's just now rolling over. Yeah. So it's just taking some more time. But at the same time, we've now seen where CPI numbers are coming down into the high threes. PCEs are coming down pretty significantly. Consumer expenditure, CPE, consumer price expenditures, and then consumer price index. Those two inflationary indicators are coming down. So, we should see, you asked me about what my next 6 months is. I do believe that interest rates will come back down. I initially thought they'd be closer into the 5s by the end of the year. I think we'll be back down to the low 6s by the end of the year. And, as far as how that affects housing, you see it, you're in real estate. It's, I would say what housing crash, we've been told that there's this housing crash taking place for the last 2 years. Well, not seeing it at all.
I think that's a micro or a macro look, right? So if you're looking at some cities, you're gonna be okay.
Sure.
If you're looking at LA,
Yeah.
things are a little bit different in Chicago, Illinois.
Boise, Austin.
Just the in-migration every year alone, which we've talked about.
Right, and COVID changed everything.
100,000 people a year.
Yeah, we get 120,000.
There's no housing crash going to happen in the Atlanta area.
We have 120,000 that came in the last 3 years every year, and we're looking at the same numbers.
Right.
Now, what we're not getting, Randy, is we're not getting the people who live here that are upgrading their house that they've been in for 7 and 10 years, going, hey, honey, now's the time for us to have that house.
Right.
No,
And
they're
we're
remodeling.
we're also not getting 30, 40, 50,000 housing units a year coming up out of the ground. I mean, how would you – it's not even physically possible. You're going to raise a new town the size of Woodstock every year? You can't do it.
Cartersville.
But, well, okay, so 1,000, a couple of thousand, sure.
One of the things that I'm hearing –
But that doesn't contribute to the backlog that's stacking up.
Well, there's a huge backlog.
Yeah.
And for realtors like me that are busy, that have a lot of clientele and some gravitas in this business, we're still going to make money.
Right.
A lot of realtors are flying out of here.
There's no crash.
Right.
It's just getting hard.
Yeah. It's
It
back
is.
to being.
You got to go get back to working.
We're back to
right?
normal again. It's
Yes.
just a hard business to. I'm seeing, because 2024 is going to be a political year.
Sure.
The politicians are going to make some financial decisions based on what looks good before an election year. Right. And so I'm hearing from some pretty big people that I get to listen to some of their conversations, that, you're going to see some of those numbers coming back down to earth, and they're going to try to help the housing industry because of that optic in 2024.
Yeah, it's a challenge right now. I mean, I've had this conversation countless times over the last couple of years, and when I see first time home buyers and they're taking on payments that are over $3,000, I sit there and I think about, like, when I was in my mid 20s, I was like, God Almighty, man, that's a tough nut to pay every single month. But I remind myself that what I'm seeing on a regular basis are dual incomes, and these folks are coming out of college making 80, 90, 100 grand a piece. So the amount of money that they're making is significantly more than the amount of money that I was making in the early 2000s when I first started. And then I would imagine, as you go on in the 90s and the 80s and so on and so forth. So there's definitely more money being made. Now, that doesn't help the lower class, the middle class. Affordability becomes a major, major issue, and it will maintain or continue to be an issue for some time. I don't know how to correct that. I don't know how you get a builder to build affordable housing when you have the opportunity to, build a $500,000 house. How are you going to talk them into building a $300,000 house? To do the same
Make it affordable.
Make
it profitable to do it. And the way you do that is ease up on the restrictions, not clamp down on them. And you let prefabs happen, and those beautiful architected prefabs I was showing you, and tiny homes and all the trends that are developing that cities tend to sniff at for 25 years before they finally get the message, right?
So some of the numbers that we're talking about, so 85% of the population makes below $85,000 a year. When interest rates are 5.5 and above, they're tapped out. That first-time home buyer, that second-time home buyer is tapped out around $450,000. Okay, so if the average price home in Atlanta in particular is $475,000, units sold, that is the average number. So 85% of the people that are out there to buy houses cannot qualify.
Right.
That's a problem.
It is. It's a major problem. And the quickest way to do that is lower interest rates. You're not going to have a crash that's going to drop prices so significantly that it'll make it affordable. The only way to do that is, you're 100% correct, is to reduce interest rates. But again, pick your poison. If we go back to, try to artificially low mortgage interest rate, that means the Fed's pumping in money into the mortgage-backed security market, and then boom, there you go. Then we're going to see spikes in inflation, and then the cost of living starts going up. So, commodity prices go through the roof. Oil, food, you name it. Commodities across the board will spike. Now they can't. Now they can buy a house, but they can't afford to live in it.
Right. So, can't afford groceries. And
it's a tough
you look
one.
at new car prices, $65,000, $75,000, $85,000. I mean, who can afford that?
Yeah. There's a reason I'm still driving a 2000 and 2008 Toyota Sequoia.
Well, I just borrowed Randall's car because mine's in the shop, and I'm like, dude, I can't afford a rental car.
So you're a Sequoia man too.
Yeah. Oh yeah. I've seen yours. I always got my eye on yours.
Yeah, it's all tricked out.
The only car with every vowel in its name.
Yep. That's right.
Sequoia. I like that.
Yep.
So behind door number A and door B are not so good. You can't reduce the interest rates artificially. You can't. There's no way to stop this train that's the acceleration of prices of the homes. So there's got to be a door C. There's got to be a third option.
I think that's back to adjustable rate mortgages, but here's the kicker.
LIBORs and all that nonsense.
Absolutely.
Yeah.
So I mean, for a long, long time, that was a great product.
Yeah.
But here's you've heard the word inverted yield curve.
Yeah.
Well, that's exactly what we're dealing with right now.
where
That's why we do not have adjustable rate mortgages that are lower than your 30-year fixed mortgages, because we're in an inverted yield curve. Now, at that same time, when you're qualifying a borrower on an adjustable rate mortgage, actually to qualify a borrower for an adjustable rate mortgage is significantly harder, because you're taking that initial rate, you're adding 2 percentage points to that to qualify them on that so it's a qualifying rate of 2 points higher than the initial start rate. That clearly wasn't the case back in, during the crash years of mid 2000s, right? So that lesson's been learned. So I think there has to be, number one, we get back to a normal yield curve where your short-term interest rates are lower. That's going to help make it more affordable for buyers to get into a house, but you also have to change some of the lending guidelines, and you have to ease up on that. And so, there again runs the balance. If we're using now they don't use LIBOR, they use the CMT, constant maturity treasury average, is what they use, right? So it's a little bit more consistent, a little bit more stable than what they used in the past. But
so conventional will have to adopt FHA guidelines, or even higher.
So, right now FHA is kind of the only game in town. I mean, frankly, because for our first time home buyers, for the most part, because recently FHA reduced their MI requirements, right? So they dropped it to 0.5% or 0.55%, depending upon if you're putting 3.5% down or 5% down. And with a conventional loan, it's going to be based off your credit score. It's going to be based off your income. It's going to be based off your down payment. So all these things play a factor in determining what your mortgage insurance premium is going to be, as opposed to FHA. You could have, 55% debt to income ratio. You could have a 600 credit score. You could have, no assets, 3.5% down, and your mortgage insurance rate is the exact same. So as opposed to
that's a risk.
That is a risk.
Also disincentivizes people to, different conversation. As is apparently, we've used a lot of terms and ratios and acronyms here, including LIBOR. I mean, what do they know about money in London anyway? But
well, it's non-existent anymore. So
apparently, what we need to do is run a Mortgage 101 series under this. Bring Darin back a bunch.
Absolutely, because there's a lot of people
how this works.
People don't know how this stuff works.
No, there's so many studies out there that asking first-time home buyers how much they need for a down payment, and it's the numbers are astronomical. It's like 90% of people still believe they need 20% down for a first-time home buyer, which, listen, if you have it, that's great, but that's not,
but you don't have to have
you don't need to have that.
I mean, VA is not even the only zero down deal anymore.
USDA is available. There's a couple down payment assistance programs that are out there.
Is Bank of America still the best USDA program?
Actually, I heard MortgageRight's USDA program is the best one in town.
Okay, so that's where I need to go.
Absolutely.
Okay, all right.
Especially,
to clarify.
The opposite of right is both left and wrong.
Well, I knew I was setting him up to say
got to deal with mortgage right, not mortgage wrong.
I needed him to say that on the air, Andy.
And it's been said.
Bank of who?
Bank of who?
All right. So let's shift gears for a minute. Your national scope with your show. You're involved in your community. You're building this great team we talked about. You're doing good for a lot of people in a lot of ways, providing jobs for people. What excites Darin Hunter about all this stuff? What's driving you?
My daughter. It's real simple. I got a beautiful young daughter. She's 6 years old. She started her first day of kindergarten today. So we put her on the bus. she got on the bus,
Picture day. You got a picture of that?
Oh, I mean, my phone is loaded with pictures for sure from this morning. And then, my mother was there, father was there, her older sister, of course. And then we followed the bus to the school and walked her, and she just walked right past us and went right into school, sat down. I was like,
no big deal.
We're just like, mommy was in tears. And I'll be honest, it was a little more emotional than I expected to be. But yeah, it was.
It's a milestone.
Yeah, it is.
And of course, she has a medical challenge, and you have a foundation. You're raising money. You're contributing to the research.
She does. She was born with a rare genetic disease called KBG. So it affects it's a mutation. She has a mutation. Some of them have deletions within their 16th chromosome. She has a mutation, which means there's some connectivity there. And so she's, if there's a spectrum, if you will, she does a lot better than most. So she's, functioning. She goes to school. She's, a little delayed. She's got she goes to speech, occupational, physical therapy twice a week for all of them.
Wow.
And then, as a matter of fact, unfortunately, we just found out last week that I didn't even know this was the thing. I thought we kind of skirted this, but loss of hearing is an issue for the KBGers, and just found out she's deaf in her right ear. So we're now dealing with that. She's going in for CT.
Cochlear implants, maybe.
I don't know. Honestly, it's so new. I'm still kind of processing. We got to go in for a CT scan tomorrow, figure out if there's anything else going on. So, it's one of those things where we thought we were kind of out of the woods on some of these things, but you just never are when you're dealing with a genetic disease, unknown. Like when she was born, she was 286 in the world to ever be diagnosed with this particular disease. And, it's not to say there's not many others out there. The genetic testing wasn't that prevalent, right? So, and now it's become more prevalent. There's about 800 kids now. And so, sort of one of the, those selfish ways that we dealt with it is we started a nonprofit. It's called Every Link Matters, and we raise funds to help kids dealing with KBG, but we depend so much on the local community. We give back to the community as much as we possibly can, in whatever form we can, whatever we need. And we try to do about one family a month, whether that's, helping with medical bills. That's kind of like where it all started. My wife and I, were just blown away with the medical bills that we were experiencing. And we're like, how are people that don't have the resources able to pay for this? And that's kind of how it all started. And then, it was help therapy for us to try to get out there and help a little bit. So it's turned into a pretty fun event. It feels great for us. We're loving it. We do a big golf tournament. Stone is always there. Big contributor, and he gets out there and enjoys a couple beverages out there with the crew.
In fact, I heard the last one was sort of like a drinking tournament with a golf sideline.
I didn't even know they were playing golf out there.
Yeah. Swing butter.
Yeah, it's back in the like early 2000s and mid 2000s. I don't even know if you're a golfer, but golf tournaments used to be a blast. Yeah. They were so much fun, and then of course a couple bad apples out in Sugarloaf ruined it for all of us, and it got on the news and all that kind of stuff. And so we're kind of bringing it back in a much more tame way, but definitely, how it goes. If you're the people's wallets get a lot more loose, the more opportunities they have to have an adult beverage. So we do it safely and have a good time with it. And turns out we raise a lot of funds, and then we're able to do some good with it. So we're excited about it. I
was in a golf tournament in Chattanooga last year, and it was for the UTC wrestling team, and one of their wrestlers had died of cancer or something. So they were raising money for that. And so for wrestlers, I was an old wrestler. I look like a wrestler, right? Yeah. And so on the tee boxes, skirmishes were breaking out, old guys against young guys and all these dudes. And we're just, we just never grew up. So I understand. I totally get it.
That's fun.
I can't add to the golf conversation. My brother's a scratch golfer. My dad was a golf pro in the summers up in Colorado at this course.
It was very serious.
They make fun of my golf game. I got nothing to add.
The blue blossom.
I wish I was a scratch golfer. Love the game.
That
but
takes a lot of work.
Oh man.
Yeah.
But we're excited about that. That's what gets us excited these days. And just the growth, of what we're able to do in the community and being part of such an amazing community. I mean, we were downtown Woodstock as a whole is just an unbelievable place to be a part of. And we're just so thankful that, I had an opportunity, I've been down here for a long time, lived down here, played down here, drank down here, ate down here. But, of course I work down here, cause I'm everywhere. But, I had an opportunity to invest in downtown, downtown on Main Street in Woodstock. And, when the opportunity came out, it was a no-brainer. I jumped on it all day. And so we now have, part of that'll be the legacy building, for the family or for my kids.
The building?
I bought it's a condo. So there's actually 3 units in there, and I bought the top floor. And then, my hope is that, I'll have the bottom here soon enough.
And you can see the sign from Ball Ground.
No kidding. It's like the beacon on the way home on 575. Oh, there it is.
It's within the city limit or city standards.
Beautiful new office, by the way. I did actually manage to get out one night and get to your party for your ribbon cutting. That was a beautiful place.
Yeah, you can thank my wife for that. My wife is she's a very, very talented lady. Not only is she beautiful, but she's talented. She must not be smart because she married me. But,
2 out of 3 ain't bad.
Yeah. So, but she did a heck of a job, and I enjoy going to my office every day. It's just great to be part of the community. Great to walk into a beautiful spot that, we built and own. And, it's kind of like, when people ask about ownership and renting, it's kind of the same thing. Like I enjoy, I feel more a part of the community that I own that building. You know what I'm saying?
You got a stake in it.
Yeah. I want to see everybody do well. I want to see the community stay, up to a certain standard, those type of things. So it's owning is a big thing.
Well, be on the lookout because Randall asked me the other day about, some space to buy, so we're looking.
Yeah. One of the things I did too a long time ago was I bought commercial real estate as well. And commercials real estate's an interesting game right now. But
it's kind of on the downside a little bit.
It is. I'm interested to see.
Time for me to buy, in other words.
Yes.
That's one of the things. This is kind of maybe a little bit off topic, but one of the ways to maybe deal with housing shortages, get people into repurpose some of these office buildings. It's going to take, I would think so. It's going to take a lot of money to repurpose these and
look at the shopping center space that's getting ready to be.
They build everything around that core, which serves the office properly, but it's not built for residential with multiple bathrooms and kitchens.
It's going to take some money.
It's going to take some time.
Yeah, it will. It's not going to happen overnight. We know that.
But it's a viable approach. It's going to be expensive, which means it's going to be high-end housing. That's not the entire equation.
Well, the last guest we had was looking for a church space, right?
Yeah.
And so the idea for him was to look at some of the shopping center space that's going dark.
Sure.
Because big spaces, he needs 45,000 square feet minimum. Mm-hmm. And so there's a lot of opportunity there for guys like that.
Right. Yeah, well, I'll certainly keep my eye open. I'm always got an eye on any opportunities. It's
we looked at a space this morning, and the roll-up door where you can pull the truck in.
Yeah,
right in the middle of it, they built a wall. So the bay space was on one side, and this little work area with a workbench on the other side. But the wall that divided them was you could pull the truck in about 5-6 feet, and then you'd hit that.
Is it load bearing?
No, there's no way.
It is load bearing?
No, there's no way it's load bearing.
Oh, okay. So
it's in there to demise the space, which could come out.
Come out.
Yeah. It's a truss roof.
I'm much better at demo.
It was a truss roof like every other thing. I was just like, why did you put it there?
Makes no sense.
Right in the middle of the door.
They knew you were coming. They didn't want you.
I guess that's it. Yeah. Don't let that guy in here.
Not Randall back.
What inspires you before we leave? Anything you'd like to communicate to people in the community or the club or?
I think just education right now, really just educating people and letting them know, what's really going on. There's, I feel so, I'm very frustrated with so many that missed out and listened to some of the wrong talking heads and the fear mongering that took place, while interest rates were low and while housing was a little more affordable, and I just hope that I can educate more and more people and sound the alarms as much as possible that, one of the greatest ways to grow wealth is through real estate.
Sure.
I don't, listen, I know there's tons of different ways now. There's internet businesses, obviously investing in stock markets, commodities. Equities,
influencers.
Bonds. Hey, listen, I just had an unbelievable experience with influencer. That was like eye opening. Very, very interesting. I've got some really very, very
There's
cool
a lot of
stuff.
Surprising stuff behind that, isn't there?
Very cool stuff coming up that I'm very excited about.
We're going to have to talk about that.
Yeah,
then.
we will. I'll definitely come on and show them. That's actually one of the new inspiring things that I've got coming up.
Cool. We'll definitely come back.
Yeah,
and talk about
we'll
that.
talk about that.
Remember, Jared, how interesting that show was. With
We got a lot of guys we need to bring
digital
back.
marketing.
Yeah.
Wow.
Yeah.
Yeah, the influencing game is mind-boggling, and surprisingly, at least the couple that I've met are shockingly intelligent. And I say that
They kind of have
and
to
I
be.
say that I only say that because you see some of the silly stuff that they do, and it's like it's silly to us, but they're laughing all the way to the bank.
Yeah.
And they've got all these different streams of income coming in, and they're just intelligent about it. And it was just really like, wow, I really am just judging this guy.
Yeah.
I was like, shoot, I gotta take a step back and realize there's a million ways to make $1 million.
I gotta check myself.
Yeah, it was eye opening, and and these guys are getting paid. I mean, paid for literally minutes of their time.
Right.
Yeah, that's a whole nother conversation we'll have for later date.
Yeah, for sure. So yeah, hopefully education, and then some of the series that I've got coming up. I'll just give you a little tidbit. I've got an NIL education series coming out.
A teaser.
Name, image, likeness series coming up. So it's sponsored by, of course, the one and the only, the MortgageRight team.
I love it.
I love it.
We got a lot to talk about with Darin.
Yeah, we've got a lot to talk off the air too.
He is a Renaissance man, a mortgage master, a real estate investor, a community pillar, a philanthropist, and a business networking guru. Darin Hunter, MortgageRight.
Thank you.